In the nonprofit world, finance is a tricky subject. Most of us would prefer to think about mission rather than the bottom line. And taking care of the financial part of the equation in the midst of dozens of other pressing duties can be extremely daunting. New nonprofit leaders and managers have to develop at least basic skills in financial management. Expecting others in the organization to manage finances is clearly asking for trouble. Basic skills in financial management start in the critical areas of cash management and bookkeeping, which should be done according to certain financial controls to ensure integrity in the bookkeeping process. New leaders and managers should soon go on to learn how to generate financial statements and analyze those statements to really understand the financial condition of the business. Financial analysis shows the reality of the situation of a business. Seen as such, financial management is one of the most important practices in management. Whether your organization is large or small, effective financial management is an ongoing process featuring a cycle of good management habits. Sound procedures and internal controls help ensure accurate accounting and high-quality reporting. Evaluation of the information in the report then informs planning and facilitates good management decisions. Regular evaluation of the process leads to consistent improvement in financial management. Nonprofit organizations need to have at minimum a basic understanding of bookkeeping activities. Bookkeeping is basically recording various financial transactions. Bookkeeping activities can often be done by someone who's doing basic clerical work in your organization. Often the board treasurer can help you develop and carry out your bookkeeping system. Nonprofits also need to develop fiscal policies and a procedures manual. The board develops and authorizes a set of procedures for how the organization manages its finance, including how activities are going to be carried out by your organization. The board treasurer usually coordinates the board's responsibility for the manual, including its regular review and update. Nonprofits also need to determine what type of accounting system they're going to use and how they're going to record their financial transactions. Accounting starts with basic record keeping, otherwise known as bookkeeping. When your organization is just getting started, your bookkeeping system will probably be based on what's called a cash basis accounting system, rather than an accrual basis system. Many organizations, when starting out, use the cash basis system and a checkbook to track transactions. In the memo portion of the checkbook, they note if the amount depicted on the check is an expense or revenue, and where the amount came from or is going to. As your organizations grow, you'll begin using ledgers to track transactions. For example, you'll post cash receipts to a cash receipts journal and checks you write to a cash disbursements journal. As your nonprofit continues to grow, you'll begin using the accrual method of accounting. You'll likely need more types of journals, such as a cash receipts journal, cash disbursements journal, a payroll journal, accounts receivable ledger, accounts payable ledger, a sales journal, a purchases journal, and a general ledger. You can do postings using a single entry or double entry method. Double entry works from a basic accounting equation, which is known as assets equals liabilities plus net equity. We'll be discussing that a little bit further in future conversations. The double entry method makes sure that your books are always in balance. Every transaction has two journal entries, a debit and a credit. Each transaction affects both sides of the equation. Each posting might refer to accompanying documents that you keep in a file somewhere. For example, posting about cash receipts might refer to invoices that you sent to clients, which prompted them to write checks for your organization. Then you need to determine if you're going to have a manual or automated accounting system. Your record-keeping system will be based on a manual system or a computer system. You might even choose to outsource your record-keeping system to another business that manages your bookkeeping activities for you. Soon, you may evolve to using a computer-based system which greatly automates entry for transactions, updating of ledgers, generation of financial statements and financial analysis, and generation of reports needed for filing taxes. The only drawback to using a computer is that you might underestimate the importance of knowing how your accounting processes really work. That's an advantage of doing the bookkeeping yourself, if only for a few months. Then you need to set up an accounts or chart of accounts. You'll post each entry according to the category or account of the transaction. Each account will be associated with an account number. These numbers are referenced when developing your financial statements. You'll refer to a chart of accounts which will tell you what account number to use when you post an entry. You can design your own chart of accounts, including coming up with your own account numbers. The chart usually has 5 areas, including assets, liabilities, net assets, revenues, and expenses. And lastly, you need to set up your budget and do some financial forecasting. You'll have an operating budget, or otherwise referred to as an annual budget, which shows planned revenue and expenses, usually for the coming year. Budget amounts are usually divided into major categories. For example, salaries, benefits, computer equipment, office supplies, and so on. You might also have cash budgets, which depict the cash you expect to receive and pay over the near term, for example, a month. You also might have a capital budget, which depict expenses to obtain or develop and operate or maintain major pieces of equipment, for example, buildings, automobiles, computers, furniture, and so on. Development of the budget is usually driven by the chief executive. In the case of corporations, the board treasurer can take a strong role in developing and presenting the budget to the rest of the board. The board is responsible to authorize the yearly budget. You should develop a program budget, that is a budget for each major service you provide. For example, a transportation program, a child care program, should all have budgets. As much as possible, nonprofits should strive to minimize overhead or administrative costs. That is, costs to support the resources that support the entire organization and all programs rather than just one program. Usually each month, you'll update your budget report to include actual revenue and expenses. Then you can compare your planned revenue and expenses to your actual revenue and expenses. This will give you a good idea whether you're operating according to plan or not, including where you need to cut down on expenses or build up on revenue.